Good morning. Welcome back to another pre-market stream, ladies and gentlemen. We'll get rolling here in just a bit as usual. But so far today, definitely going to be keeping an eye on Boeing and a couple earnings plays. So pretty much same kind of go-to plays as normal. Earnings reports and, until the earnings season is over, shall we say. Because we still have probably like another couple weeks, maybe next week and the week after. Oh, excuse me. Hold on one second. All right, apologize about that. I don't know if you guys heard that, but that was extremely loud. It's coming from my speaker across the room. Good morning. Good morning. So we'll get started here. Looks like maybe the notifications are just now getting out on YouTube, so it looks like they're just now starting to do their job correctly. Alrighty. So let's get into it. Good morning. Good morning. All right. So first one on watch is going to be Boeing. So yeah, a little bit higher price, about 280. Jeffrey Epstein did not kill himself. Most likely murdered, or most likely murdered. Most likely? No, definitely. All right, so first one we'll be watching is Boeing, if I could ever type it in correctly. There we go. Why is it? That is so odd that it keeps doing that. So the first one we'll be watching is Boeing. So Boeing has a great looking setup right now. The formation here on Boeing is really, really good looking, and it really appears like we're going to be breaking out on Boeing today. Just by the way it's traded, we had a nice up move. We have pulled back. We put in support. We pushed up, we held resistance in the channel. We came down, we tested support, we broke back up. Today we've curled, and now we're up just over the highs. So in reality, it's like a cup and handle bullish formation, right? So if you look, you kind of have, the cup would kind of start like right here. Hold on. Yeah, so that's really your cup. Up to here, and then your handle's like right there. And so we're starting to break up, and if we can get over this top and rip, that would be good. If we look at the daily chart, 4-hour chart's better. So if we look at the 4-hour chart, we're just barely pressing on this resistance right here at about 370, right? We had this big drop down here. So there's a lot of people that were shorting on this day, and they would start stopping out probably over the level of 370 to 375. So we could nonetheless be looking at like a really solid green day from Boeing, and really that's what we're looking for. That's going to be heavy on the main watch for us today. Okay. All right, next one that we'll take a look at real quick is AMAT. Just going to kind of fly through some of these next ones. We don't have to spend too much time on it. But if you look, AMAT had a great breakout from the earnings report there. So we did break up. The daily chart should have put us near, or we are all-time high? So where are we at? 360.65. So 60.65. We'll put it right about here. So we're almost at the 52-week high. So we are getting into some resistance there on AMAT. But that's also from a couple years ago. So nonetheless, we'll be following AMAT long bias today to start until it tells us otherwise. Right now, the chart formation isn't all that great, so I would just be waiting for the intraday charting to set up accordingly, but this is a good one to keep on watch today. All right, next one, FTCH. This is going to be one of our cheaper ones today, which is only about $9-10. Start here on the daily chart, 4-hour time frame. And you'll see that it has bounced up right into some resistance. So there are some resistance tops here at about 930 and 960. So anyways, we'll be watching FTCH long to see if we can get it up and through the 950s and 960s. Right now, it's just kind of trending and staying up pre-market today. You can argue there's like a small bullish kind of breakout channel happening. So ideally kind of watching for a long over the 930s, 40s, and 50s on FTCH. All right, next one, NVDA. We'll just briefly touch on NVIDIA. Not much to say here, but anyways. So NVIDIA, again, reported earnings. So far, the report hasn't really done anything. I mean, we whipped up, we whipped down, we bounced, and we're just kind of ho-humming along. So the whole daily chart here, right, it's been trending up, trying to break out. And if we look at the 4-hour, you're going to kind of see like a bullish pennant, so to speak. All right, you can kind of see here, it's almost like a bull flag, right? We've kind of been channeling back and forth, and now we're kind of curling up. So if NVIDIA doesn't dump out today and it kind of consolidates and holds on the day, we could be looking at kind of a fresh bull flag breakout scenario. So really just kind of watching NVIDIA today, see if it stays up on the day, see if it consolidates. If it doesn't drop out too much or close like a really bad day, then we'll still remain in this kind of bullish formation and setup, which could pan out in the next day or 2 or 3 days, if not today. So really kind of just watching NVIDIA on standby to see if the right formation occurs to want to trade it today or in the next couple days. All right, and then lastly is JD. So JD reported they broke out of this kind of bull flag setup too. The daily chart has it over a lot of resistance, right? If you look at a 3-year chart, they did kind of come down. We just kind of broke out. So I think the bull side is probably the way to go with JD for now. We are getting a little whippy and a little back and forth trading so far on it today, but nonetheless, this is normally how JD acts. So regardless, going to be watching this long bias today too. Let me try and pull up like a 2-year time frame. 2 years day, there you go. We're at a price of 35.15, so about 36. So yeah, it does have a little bit of resistance right about 36. So I would say like an ultimate move where we could see a nice push to the upside would be over the 36 mark. So let's double check. Right around 36. Yeah, you can see we tapped right at about 36 and pulled. So over 36, you could be looking at a pre-market high breakout and a long-term resistance breakout. But the move would most likely occur and start well before 36. Okay, so those are all the stocks. All right, now we're done. I've run through them, and now I can kind of get to the good stuff here. Some questions. Good morning. Good morning. Have you used Chartmill before? I have heard of them, but I've never really used them. Hey, Connor, any advice for new beginners for the upcoming market meltdown? Any upcoming well, yeah. So I mean that the advice could just run us into a rabbit hole, but basically this is what you're looking at whenever you're going into a potential recession or downward turn in the market. You need to prepare, right? So basically this is how it works, right? In the world of just in life, you have money, which it can be in the form of cash. It can be in the form of digital fakeness, which is just a bunch of zeros on a phone application that says that's money's in your account, but it's really not. Right? So it's really cash, or you have assets like a house, or you have something like bonds, or you have money invested in stocks or something like that, right? So during a recession, everything pretty much goes down and yields negative returns. There are things that will yield a positive return. Things that would yield a positive return in a downward market are going to be kind of low-risk bonds. You're not going to make a ton of money or a ton of return. Or you could do like a low-risk CD, which isn't going to give you a massive return. Or you could do something like a Wealthfront individual cash account, which I do for like spare money left over. That has about a 2% yield, so you're beating inflation or just breaking even with inflation. Or you can buy things like gold and silver that usually perform pretty well in comparison to the overall market in bad times, where you usually would see somewhat of a positive yield. So as a beginner, really, if you're not invested, then you shouldn't have to worry about it too much. And really, even if you are invested, well, if you are invested, yeah, you look at shifting your portfolio around into more defensive stocks that don't see as big of a downturn during bad times, things like gold and silver that naturally go up during bad times. So there are things that you can do to combat the downward pressure in the market, but you can't fully unexpose yourself to the risk of the market at all. So if I were a beginner and I haven't started buying anything in the stock market, then I would just wait and collect cash. So this is what I would do. If I don't have any money in the stock market and I was just thinking about investing today, I would seek out some help or some education, which you're doing now, which is good. And I would say that it's too high to start buying up stocks. I would wait because there's definitely a cheaper price coming around the horizon. But if you want to start getting invested, then start investing in things that would most likely net you a positive gain during a bad time, rather than trying to make a gain on what we already know is high risk and pricey, which is stocks. So I would look more at like gold, silver, a 2%, 3% yielding interest account, or long-term bonds that just provide you a small return on your money. And really the goal of that is to make some money while accumulating cash and more cash so that you can buy up stocks at a cheaper price when it does happen. Okay. Tesla, Joe C., not really crazy about the way Tesla's formed this morning. PSTV, I haven't seen that stock in, I don't know, months. Let's see. PSTV. Oh, I didn't even know they reported earnings. Huh. It's probably because the gap isn't that big, so it never really piqued my interest. But, yeah, I'd follow that. Yeah. They got, wow, really? Crazy. Yeah, follow PSTV for sure. Yeah, it's definitely worth watching long bias, because why not? It's down to $3. It was like 20 something. There's a gap fill. It's cheap. When things like this are cheap, then a lot of people can pay attention to them and people can trade them. So yeah, we'll watch it. I mean, the formation so far really isn't that great. There is a bearish divergence too that's playing out right now, which from here to that top and this one to that one, not big but slight. Yeah, it's worth following. Good morning. Yes, good morning. Silver, gold pullback, will they go lower? Yeah, they could very well go lower. They could very well go higher. I have no idea. I cannot predict and or control the movement of every single asset. So yeah, I would assume that they could definitely go lower. But again, you have to realize they just went on an amazing move. You don't see moves like that in gold and silver in general, and it had a really big move. Okay, and now think logically, right? Let's think logically. We've seen gold and silver go on a really solid move, and now they're seeing, somewhat of a decent pullback and kind of correction, okay? If the markets were going to go into a bad time and gold and silver were going to go up in prices, and I was some big-time investor and I wanted to get some skin in the game on silver and gold, would I want to be buying silver and gold at gold hit like almost a high of 1,500 and silver hit like a high of like $19, right? And now silver is down at like 14 or 15. Anyways, so they've all pulled back. But as a big time investor, right, if we had a very strong idea the markets were going to go into a bad time, then we'd have a pretty good idea that gold and silver would perform pretty bullishly. And rather than us buying the high at 19 or buying a high at 1,500, let's let it consolidate, pull back, and go through a correction, and that's when we'll start buying in those. Because even if we were in before the move happened, we don't want to be buying the high of the move, so we can wait for a correctional period, and that's when we'll start buying those up even at cheaper prices, anticipating, bearish times ahead. So for me, I actually just yesterday bought 1,000. Yeah, no, I think I bought $1,000 worth of gold and silver yesterday too. Added a little bit more. I think yesterday I bought like some GDX, I bought some GLD, and I bought some SLV. So I bought another $1,000 worth yesterday. Roku. So with Roku, that's a good one we should talk about. I haven't really been trading it much I don't think I've traded it. Well, yeah, I pretty much haven't really been trading the past couple of days. So yeah, most people are probably going to be watching this long, whereas I'm actually going to initially watch it short. You can see this red dotted level here. I'm going to watch it short, straightforward. I'm going to watch it short first before being long. We've had like 5-6 days of bullish movement, no really big red day or even a sort of a red day. So I'm going to watch it short. It makes sense for me to watch it short. Even if it rips, it really doesn't matter to me. We're up to a previous top. This is the first attempt at previous top. Granted, it did move through previous resistance points on the way up with really no hesitation. Most of you guys probably don't even know what I'm talking about in that regard. But it's a first attempt move, so naturally on a first attempt, it will always fail. So I'm not going to play the probability game of it continuing to move when the probability is normally it's not going to go higher. It's actually going to go lower here. So I'm just going to, even with how bullish it looks and how great it looks, I'm still going to stay on the side of short, at least today, see how it trades. But at the end of the day, to me, it doesn't matter. If it breaks out, great. You got to note that this is a strong breakout point. This top, these tops, slam. Back up, resist, back up, first attempt from this move. So we are at a resistance point. And this move over like what price is that? 152. The move over 152 can really net a strong push, absolutely. But I still think that this move could be a little too soon. We might see some consolidation, some hesitation initially today or for the full day, and then maybe it's Monday, right? Anyways, there is a strong long play to be made over the 152 mark. I think it just might be a bit premature today, but it's worth watching. So like a way to go about possibly trading this today and maybe deciding whether or not it is the long is to see if it holds the one like this level here where I have 151.60 to like 151.20, right? See if it can hold here. Maybe that's not even accurate. Yeah, maybe even like the high a day mark from yesterday. So yeah, that makes it kind of hard. Long story short, you just got to make sure that if it does pull back and it's holding really strong, to notate that like it did yesterday, right? It pulled back, held, bounced, pulled back, held, up, right? So if it can remain holding up the highs that it's put in from today and stay above yesterday's high a day, then it has a stronger chance of having that strong move. Be custom. What's up, brother? RSI divergence. JCP has a good earnings report. I mean, yeah, I'm not going to trade JCP. It's a barcoding stock, so it really doesn't make that big of a move. So it's just not a particular go-to stock for trading for me. But you are correct. They did have an earnings report today, yes. Are the inverse stocks to trade during downturns? So there's no inverse stocks. There's only inverse ETF, exchange traded funds. But yes, there are those that you can trade during downturn times. There's a handful of them. There's more than I could tell you. The ones that I can tell you aren't all of them, but UVXY, TVIX. There's more. Those are just pretty much the only two I ever pay attention to. But pretty much all you got to do is go to Google and type in inverse related ETFs, and you'll get a handful of them. You can get some that are in direct relation to the volatility index. I believe that you can get some that are directly related to a specific index like the NASDAQ. So there's a couple different ways you could go about trading an inverse move to the market. But anyways, yeah, go to Google, search up inverse related ETFs, and you'll get a handful of them. Do you think cannabis is going to rip after rock bombs? I don't necessarily think it's going to rip, but I do think that yeah, I had a meeting with my accountant yesterday, and he was like, what do you think about the cannabis market? And I was like, I think we are seeing a perfect opportunity to buy. I'm like, there's no way that eventually it's not going to be legalized, and there's no way that it's not going to be making more money in the future than what it's currently making now. And I was like, I think we're just seeing like a bear market in the marijuana sector before it does pick up and go on like a long-term kind of play. And this is where investors that have bought early are all getting shaken out. They can't hold anymore. The pressure is coming down on them. They've pretty much, if you bought anywhere at like 50s on CGC, if you bought the highs at like 40 with MJ, I mean, you've pretty much been washed out almost 100% of your capital. So I think, yeah, you're seeing the phase of like the washing out of pretty much all investors into that, not all, but many investors into that sector right now. But the question is, yeah, do you buy it, right? It's still a risk. Right. So the way that I would go about doing is maybe looking at, because there are some of the cannabis companies that are better than others, and there's some that are just probably going to be shit and never really great. Right. So it comes down to, which stocks do you pick, which ones. Right. And you can alleviate that uncertain risk by just picking like the MJ ETF or marijuana ETF that kind of groups them all together. So you're diversified amongst which stocks you own, but all through just one particular ticker. So that way, even if you do get some shitty ones, which there's always going to be some that are better than others and worse than others. So if you do get some bad ones, you can have some good ones and offset that and stay diversified in the cannabis market, yet at a great price. Cannabis companies are blaming provisional governments in Canada for their lack of profit. I don't know much about it, over there in Canada, but I can promise you that governments or government bodies do have lots of restrictions and do cripple individuals and companies from growing, without a doubt, guaranteed. If today everybody paid 50% less in taxes, they would retain 50% more of their own money, which means they would be growing at a 50% faster than they would otherwise be growing if they stay at the same normal tax rates. So without a doubt, governments do cripple individuals and businesses from growing and succeeding in that sense many times. OPRA did have a really good move to start the day yesterday, I remember. Walmart, I don't normally, yesterday, like I said, I don't normally trade Walmart on earnings reports day. I did mention to our private group that Walmart could be something to keep an eye on today. I'm not really crazy about it based on the other things that are moving around the market today. We could very well pick and choose other things that I think will trade better, which are obviously what's on my watch list right now. What do you think since Buffett bought into the company according to the Oxy? What do I think about it? Actually, I own Oxy. Pretty sure, or is it Clorox? I'm pretty sure I own Oxy and Clorox. What do I think about it? I don't think anything. What do you think, right? Why does Buffett buy anything? Buffett buys something because he sees value in it. And when Buffett buys something, he's not buying something that he thinks he sees value in for the next 2 years. He's thinking 10, 20 years out. That's where he sees the value. So that's all that means. He sees value in the company Oxy. What's the longest time frame you use for a long time trade? I don't really think, I don't use any. It doesn't, nothing. Yeah, it doesn't really, let me rephrase that. When picking a long-term investment, you shouldn't really care what happened this year or what happened over 2 years or 3 years. You really want to be looking at how the company has performed over 5, 6, 7, up to 10 years, right? If you look at a stock and for 10 years it's just been going up, probably a decent stock to buy. Not that it won't come down, not that it won't get cheaper, not that it won't decrease from where you purchased, but right? So when looking at long term and just kind of looking at a chart, you have to change over your mentality from the trading you have to change the mentality. You can't use trading mentality when looking at something long term, right? Because if we do that, we may look at a chart over the past 10 years and go, okay, so this thing moved from 20 to 150. Wow, that's really high price from where it was. It feels like I'm buying it really high, right? But you have to, and that's what you don't want to do when trading. You don't want to buy something high just before it's about to come down. But if you're going long term, then you should expect you're going to go through some bad times. You'll go through some good times. But when you're looking at a 10-year chart, you can't have the trading mentality that says, wow, this is kind of high price. You have to have the mentality that this is long term. I'm looking at a company that should continue to grow. And when you look at it 10 years and you see that it's just been going up and up and up with its average pullbacks or corrections or whatever, you can tell yourself that for 10 years, this company has been succeeding, or else the price wouldn't be going up. So we already know for at least 10 years that the company is doing something correct. They're doing something right, whether it's management, whether it's money, it's profits, whether it's all of them, could probably be all of them. For 10 years, they've been able to show me that they've been able to sustain business, grow business. That is most likely a company that I would want to work with or invest in, right? If I'm seeing that a company is just kind of doing this, right? I look at a 10-year chart and I see it just kind of goes like this. Not that you can't make money on it, but you really got to pick a bottom. Because if it just channels back and forth and rallies, then and that's for happened for 10 years, you have a really good idea of where investors think that the company is worth if it's not going higher, and where people, the highest that people are willing to pay for a company, the kind of the lowest over the past 10 years where someone would be willing to pay for something, right? So if a stock is ranging from like $30, let's say a stock is ranging from $100 a share to $50 a share over the course of 10 years, that clearly tells you that somewhere in between 50 to 100, people see value in owning the stock, and up towards 100, people don't see the company ABC as a whole with all their cars, employees, desks, computers, note paper, pens, paper, pads, all their inventory, all their products, all their customers, all their employees, all their buildings, all their work vans, work trucks, their books, everything about the company to investors is not worth more than paying $100 per share on the open market system, all right? But they're willing to pay at 50. So you look at the 10-year chart and it goes from 100 to 50, 100 to 50, and it's just kind of rallying around there. You clearly know investors are willing to purchase shares in that company around 50 and sell it as it approaches 100 for numerous reasons, but the most important of all is the investors do not see that the company as a whole, with everything I mentioned, employees, cars, and everything added up, is worth more than $100 per share. So they have a consistent company where it's pretty much doesn't make it more than 100 per share and doesn't go less than 50, right? Yes, PR I am looking at at least for like maybe a day trade to a swing trade after its annihilation, yes. FCEL, that's really kind of an older one, not an older one, but I never trade that. AMRN, I wouldn't be looking at AMRN bullishly right now in the short term, maybe in the next couple weeks, but it's already had a nice move after earnings and it's popped up right into some resistance on a first attempt move, so I'd be more short-term bearish than long-term, or more short-term bearish than bullish in the short term. Uber, I don't know. Honestly, I can't get behind Uber right now. 15 minutes gonna save you 15 or more percent. I guarantee. Yes, that's you. Yeah, Brad. No, actually, we'll be redoing the course and doing it in this format. It's not that the course will have anything super new, but the videos will be more detailed, look a little bit different, easier to follow. Absolutely. Brad, thank you. Appreciate it. I would say that we are one of the, I mean, everybody's got their own niche, but we're definitely detailed, definitely knowledgeable, educated, and explain things and try to really get to everyone's comments or everything that people ask. Anyways, so it's 9 o'clock. That's all we got for today. I do appreciate everybody. Take care. Have a great day. Thanks again for tuning in. Feel free to press the like button. It takes you about a half a second. It really helps me out greatly. And then I'll see you guys on the next video on a recap video today if we end up trading, which we'll probably end up trading. But other than that, everybody take care. Don't try to rush your trades today. Stay patient. Nail yourself a green trade. And I'll see you guys on the next video, which will probably be later today. All right, guys, take care.